On Biznomics this evening, we thought of bringing to you a live webinar via Zoom on Facebook too, to talk to you all about capital markets, the way forward, and how Sri Lanka is going to sustain to bring about stability, to send a strong message of stability, not just to our local investors, but also to foreign investors. And to discuss all about capital markets way forward, the potential, and how Sri Lanka can be positioned, and also to touch a little about the banking and financial sector. I think I've been able to invite just the right panel this evening. We have with us experts from who have a lot of experience in terms of capital markets, banking, finances. And I would first like to warmly welcome Dr. Aritha Wickramanayake, former Director General of the Securities and Exchange Commission, who is joining us this evening via Zoom. Dr. Wickramanayake.
Hi.
Hi, thank you very much. I think I'm talking to you after a long time, since your time back in 1995 to 97, overlooking the Securities and Exchange Commission. I also would like to welcome Mr. Ray Abeyewardene, who's spearheading the Colombo Stock Exchange, overlooking what's happening there. So thank you very much. I think it's a very, I would say you're quite content about trading today.
Yeah, quite high and very content, yes.
And also Mr. Ravi Abesurya, who was overlooking the matters of the Colombo Stockbrokers Association, and now chairman of the committee that is looking at proposals and policies on the banking and financial sector. Thank you for joining us, Mr. Ravi Abesurya.
Good evening, Indipari.
I think we have built quite an interest around this topic that we are going to discuss right now. The last dip, rally to a vibrant capital market. I thought before I ask you my questions, I would allow our panelists to give us an outlook for capital markets. Let's take about 2 minutes, because we have a Q&A session also coming up. And I would like to start off with Mr. Ray Abeyewardene. How do you observe the way forward for the Sri Lankan capital market? Especially, I'd like you to talk about the Colombo Stock Exchange and from a perspective of foreign investors.
Yeah, so thank you, Indipari, for the opportunity, and good evening, my fellow panelists and all those who are listening in. A very good evening to you all. We are in, I mean, if you, as Indipari said, today's market was quite aggressive. We had a 120 points increase on both the all share as well as the S&P top 20. So there is a bit of volatility also in the market. And as you know, we are coming off after almost a 7-week closure of the market. So there was a little bit of anxiety at the start. People are a little uncertain, as you would have seen on the first day of trading, where there was a little, there was a bit of maybe over anxiety, or some people were overzealous, and that resulted in an early closure in the market. But what we've seen since then is that there is a settling down of things. We've seen turnovers being very healthy throughout. We've seen the indices going up. Overall, we've seen that the market's been up about 4.5% since the last Monday. If I can quickly take you back to what the market was before the COVID-19 virus affected Sri Lanka, since about November of last year, up to the 20th of March, which was the last day that we traded, the market was on a steady decline. I mean, I think we can't lose sight of the fact that there was a decline in the market continuously. So it wasn't something that was brought about by COVID here. I think it was more to do with the build up globally of the COVID-19 virus and what the economists and the fund managers felt might happen. So that resulted in sellouts, and we saw an outflow that was happening continuously in January, February, and then March until the closure of the market. So what we are seeing now is, I think there's buying interest coming, and I've always maintained that at the right price. And I said that there were some very good bargains in the market. I said some of these things, some of these shares were golden opportunities to buy. And I think what people have done is seen the practical, see the value. And for the discerning investor, I think there's a lot of opportunity. And for those who are prepared to take a long-term view of the market, I've been a proponent of that all my life, that if for those who are prepared to buy and hold, buy at the right price and hold, there's always money to be made. So I'm very, very optimistic and very hopeful that as we go on, despite the challenges that we will have to face, and as you know, we are a very resilient nation. We've overcome bigger hurdles. I'm very confident of our ability to ride through this wave as well.
And now I would like to speak to Mr. Aditya Wickramanayake. Dr. Wickramanayake, you, as the former Director General of the Securities and Exchange Commission, I think you have a lot of opinion about how in the current context, we faced a severe challenge in the face of a global health crisis, and then in Sri Lanka, a curfew. The Colombo Stock Exchange had to remain closed for 7 weeks. But amidst all that, we're talking about what policies, what measures as a regulator, the Securities and Exchange Commission should bring about in order to create stability and to send a strong message to investors while remaining closed. Yes, curfew continues. But from your perspective, as an opening statement, what have you got to say about what we should have done and what we should do?
Yeah, first and foremost, Indhivari, I don't really place any significance to this sudden surge in the market. I think we've all heard about the dead cat bounce. Even a dead cat, drop it off a building, it will bounce. And we've seen hundreds of dead cats in this market. It's a graveyard of dead cats. Okay, and I'm not concerned about these sudden surges, and those are, I think, temporary. We'll get onto that later on. My concern is whether the market will be able to sustain this growth or maintain these levels over the long term. In my opinion, a capital market takes a long time to build. You got to build a solid foundation for the market. And that is something that I've been talking about for a long time. We lack that. Let's be very, very honest about it. We lack that for the moment. A few days ago, I was listening to a seminar where the CEO of the stock exchange gave certain figures. Ray, you'll know these figures. And he gave the number of investors in this market, the amount of participation in the market, the number of listings, the average turnover, right? And I mean, all sorts of figures were put out by him. And he was honest enough to say that, we should really we really don't have anything to be very proud about, right? And again, it's not the fault of anybody, right? I'm not blaming any government. I'm not blaming any bureaucrat. I'm not blaming any employee of the stock exchange or this. Like that. If you want a sustainable market, you got to get down to the foundation and start building on that. And unless you do that, we can't sustain it. Right? So you'll see these little surges, it will go down, but ultimately there's nobody to hold it together. That's the problem. If you look at the history of our capital markets, and I'm being very honest, candid with you, if you look at what's happened over the last 3 years, everybody was fighting with each other. The SEC has been fighting with the stock exchange, the stock exchange has been fighting with the SEC, the brokers have been criticizing both of them. I mean, everybody is leaving the industry in droves. There are very few professionals left in the market to be able to build these things. You look at the level of financial journalism, we've come to the rock bottom at the moment, right? Nothing has really been done looking at this whole thing in the long term. And I think we need to take a step back and look at what we have today and start building on that. We need to take a long-term view, look at a 5-year, we got to look at it over the next 5 years and start building something which will be sustainable. Take little things. Ray, we can get onto that later on. We've been talking about the demutualization of the exchange. We've been talking about amending the SEC Act, right? I mean, there are numerous things I've been talking about, but nothing has really happened because of this infighting, right? we need to create excitement in this market. We need to get people to feel that they have a stake in this market, and we need to build a sense of professionalism in the market. And until we do that, we are not talking about anything. We are looking at daily trading. We are looking at what will happen next week. Right now, people think that if you bring in the EPF and the ETF, the market is going to thrive. It's not. Right? It will go up for a couple of days, but then again, because there's nobody to sustain it, it's going to come down again. We got to get back to the basics, get back to the drawing board, and start rebuilding a market that will be sustainable over time. And it's possible. It's being done before. I think Ray and Ravi have been in this market for ages. They know the history of this market. They know the effort that has gone in to try to build something that was sustainable, right? So we got to look at that, right? Now there has been, we'll get onto more details later on, but don't look at these bouncers. They mean nothing. We need to really get down to brass tacks and try to rebuild this market over the long term. I'm sorry to rain on your parade, Ray. I know it's exciting to see this market going up, but I don't really read anything much into this whole thing. I don't know what Ravi has to say to that.
Certainly. Thank you very much. Thank you very much, Dr. Vikram Nayak, for your opening statement. I think Mr. Ravi Abesurya, you, the former head of the Colombo Stockbrokers Association, and now you're chairman of National Agenda Committee for Finance and Banking Sector. You're here to talk alongside the chairman of the Colombo Stock Exchange and also the former Director General of the Securities and Exchange Commission. But really, what is the sentiment in the market? As a stockbroker, as somebody who has been here with the regulator, facilitator on both ends, what is the outlook for the market in your perspective?
I totally agree with Arita. We have been kind of talking a lot about reform, structural changes to our capital market. But ultimately, what got implemented is zero. So we have a situation where there are fantastic ideas, fantastic programs to get the capital market going, but no implementation. Now, our market is challenged by several aspects. The size, smaller size is one major issue. Lack of liquidity is another issue, and governance standards. So, these three issues have been, affecting our market. We see a little bit of activity and it dies down. So, as Arita said, it is not sustainable when we don't have a proper foundation. So, this issue needs to get sorted out, and various consultants have come and done a lot of studies in what needs to be done. I can go on this. So many ideas are there, what needs to get done, but it doesn't get done. So then we will have a suboptimal market. It's like a half-baked cake. You can't eat it. So we have a market which is just hearsay and extremely small when you compare even with the regional markets. So, we are expecting foreigners to come and run this market. We cannot expect it. First of all, we need to have institutional investors investing in our market before we can convince foreigners to come. So when foreigners come, yes, it picks up, and when foreigners go, it comes down drastically. So we cannot sustain in one cylinder a car. Even if you have engine, you need to have at least 4. So in this market, we are just trying to run with one cylinder. So there is no way it's sustainable. That's the biggest issue we are facing in this market. And the sentiment is also, the brokers all know the facts. Yes, we can see some kind of activities after the market collapsed because of the 7-week closure. But thereafter, there has been some retail activities, but it is not sustainable. That is what the majority of the people see as a market which is not going to go anywhere unless proper reforms are brought in and structural changes are brought in.
I think it's time to turn to Mr. Ray Abeyewardene, chairman of the Colombo Stock Exchange. Now, the Colombo Bourse performed quite well today, but listening to Mr. Arita Vikram Nayak, Dr. Vikram Nayak, and Mr. Ravi Abesurya, I think you have certain challenges that they've brought up to address right here. As the facilitator of trading, Colombo Stock Exchange, is there enough done right now? Because for a long time, we've been talking about sustainability, stability. Yes, COVID-19 is a challenge we see now, but there are several challenges we've been talking about running up to this period. Has there been sufficient work done in order to address all those challenges, which will also take us to the future, regardless of what's going on now?
Which is why in the very at the outset, I said that the decline started from November of last year. And if you take a year from November or December up to March or up to date, I think overall the market is still down about 24 to 25%. So we can't take that out of any optimism or any kind of interest, or there's a surge in the indices the last couple of days. You still can't take out the fact that the market was on the decline. That's from a market, say a standalone. I'm taking certain thoughts of Dr. Wickramanayaka's as well as Ravi Abesuya, which I think are spot on, because we have to look at the macro picture. We have to look at what else we could have done, which we have not done. We don't have DVP, which is delivery versus payment, which is one reason why we could not, one reason what inhibited us from trading when we're during the 7-week, during the curfew period. The other is that we don't have other products. I think Ravi knows all that we have been going through, and even Dr. Wickramanayaka. So ours is just a one-stock market. So the sustainability of that from that perspective makes it even more difficult, because you're trying to hold on to one, whilst the rest of the other developed markets have other products that they can sell. So that even if the equity market is down, you will have the derivative markets doing well. You will have other products that they can sell. So we have, in that sense, we have never been able to bring these out. And I remember when Dr. Wickramanayaka was DG, that was, I guess, a good 15, 20 years ago. I was in the market myself, and I think Ravi's been there for a long time as well. So if you look at it from a holistic perspective, I think there's a lot that could have been done, which have not been done, which I hope, I'm coming to the tail end of my career in the industry, but at least the future, at least those who are the successors will take this forward. And the biggest thing that we have had is that I think Dr. Wickramanayaka, Ravi, Indivari, and our listeners, is that we failed collectively, the regulator, the market participant, or the market facilitator, which is the stock market, and I must say from a government's perspective, because I've been calling out this for a while, to say that we needed to have a collective effort if we were to develop this market, to bring it to the level that Dr. Wickramanayaka and Arita are alluding to. So I have no argument with you on that if you look at the bigger picture, there's a lot that we have failed to do. But I was relating to Indivari's initial thing, saying that there has been some gains in the market. And I totally agree. And I said this earlier, these little gains are things that we need to be careful about, not to be overly elated either, because these are little blips that will happen along the way. But on the overall, the bigger picture, there's a lot more that needs to be done if you are to get the market to a level that Dr. Wickramanayaka was alluding to.
As you talk about a holistic approach to develop the market, Mr. Abewardena, who should bring these stakeholders together? This is a question back to you. When we say we fail to look at bringing in other products, other services that will create that stability, regardless of what performs well and what not.
Indivari, can I jump in at
Sure.
this moment? Because you're putting Ray in a bit of an embarrassing position, and I like to speak for everybody, right? I think one of the biggest problems in the market until now, right, has been the SEC. Let's be very frank about it. Okay, a lot of the innovation that could have come out had been stifled there over the last many years. Okay, there has been very little leadership there, and whatever ideas that have been brought up by the industry have been struck down by them. I don't know whether it's a question of a lack of knowledge or ignorance or just stubbornness. That I leave the public to judge for themselves. Right? a situation was created by the SEC where they made everybody think that the entire industry was absolutely corrupt. Right? There were a lot of people who were corrupt, no doubt about that at all. And I think if there were people who were corrupt, they should have been dealt with. But what they did was that they undermined people's confidence in the market. And then every idea that was brought in by the industry over the years had been stopped by them out of complete stubbornness. I will give you an example, right? The demutualization of the market. The demutualization of the market should have come several years ago. I think it's too late now. I think we missed the bus, right? But had that been done earlier on, I think there would have been far more proactive market development by the stock exchange. Okay, what happened there? The SEC was fighting over a certain percentage of the proceeds that would come from the demutualization, which was stupid. Okay, and that whole idea fell apart. Then they brought in a SEC Act out of nowhere, and that I've never seen a law like that in any other part of the world. Right? Again, that law was tailored to fix the brokers. Right? You can't regulate like that. You got to let the industry run itself. It's the industry. The industry knows what it needs more than any regulator. It's for the regulator to facilitate development rather than say no. And even worse than saying no, what they did was, they never responded to any questions that were posed to them by the market. Approvals are delayed. They were just stubborn, absolutely stubborn. Nobody responded to it. Now we've come to the industry, right? The industry, right? I'm telling this to all of you, all these brokers. The industry was full of a bunch of cowards. Nobody was willing to take on the SEC and argue with them or fight the case when they knew the SEC was wrong. And that is what has brought this market to this situation. Now, recently there has been a change in the administration of the SEC, and I think the new people there, I think, are far more progressive and far more responsive to what the industry wants. Unfortunately, because of this COVID virus situation, I think all their interactions with the industry has been stopped for the moment, right? But you must be willing to listen. It's humility that actually helps you to develop a market. You can't be regulating top down. Look at the number of listings. How many listings have we had over the year? Why? Because if you tell a company that's ripe for listing to list, they will say, why should we bother? Right? We are just harassed by the regulator once we do that. There are more companies wanting to delist today than wanting to get listings. Right? A lot of people, see, markets consist of different types of participants. You have long-term investors, you have speculators, right? You have the institutional funds. It takes a composite of all that to make a market. A lot of them will not come back to the market because they are not sure how they'll be treated when they do what they're doing. Speculation is not a bad thing. You need speculation to develop a market. But nobody is willing to speculate today because they don't know how the SEC will come down with their rules and take action against them. So hopefully this would have changed now, right? I think we made a change for the better. Right? But I also have a lot of responsibility on Ray and the industry to interact with the SEC and try to get these developments done. Sorry.
Yes, Mr. Ray Abeyewardene, I think the Colombo Stock Exchange, from your part, you have spearheaded a lot of activities in terms of development of market. A lot of initiatives taken by the Colombo Stock Exchange itself. But I'd like to turn to Mr. Ravi Abesurya. Dr. Wickramanayake said that the industry does not know what they want. Really, are you a bunch of cowards?
Well, I don't think we are a bunch of cowards. We have been, giving proposals after proposals, and I was the president of the Brokers Association, and we have been trying to convince what needs to be done. But unfortunately, there have been several changes in the administration of the SEC. New commissions are appointed one after another, and each and every commission comes and starts tinkering with the SEC Act, and delays the process of what should have been done 25 years ago. I will take one example. When I was involved with the stock exchange, we put a proposal to kind of digitalize the whole operations. Otherwise, we would have not needed to close the market for 7 weeks if we had moved a little bit more in the back office to do the contract notes by email and settlement of transactions by bank transfers or online transfers. Now, these two were the only two that prevented us from properly having a market where anybody from anywhere in the world could have traded, not necessarily even homes, because the trading side is all electronic and can be traded, and the systems in the broker companies were all modernized. But just because of the lack of SEC action on simple thing as moving on to digital platforms, which was proposed by Colombo Stock Exchange long time ago, 5 years ago, and I think Prashant Balendra was the chairman. We got together and proposed these things, but it never got done. So this is the state of affairs. We have been trying to tell them, but it is something where when the regulator is all time powerful and thinks differently and forego the market development aspects as well as talking to the stakeholders. As a regulator, one of the most important things is you have to have regular dialogue with the stakeholders. And if you don't do that and try to think you are all time, everything and run the industry which is going down, I don't think there is any future for that. So that's the history. We hope things will change now. And I strongly believe what is required if we are to do the holistic reforms, then you need to have participation of larger number of government institutions. That is Ministry of Finance, SEC, IRCSL, which is the insurance regulator, the stock exchange, the central bank. You all has to get together, including all the stakeholders, and work in a manner together to address the impediments, because we have impediments in the supply side, demand side, and the governance side, as I mentioned at the beginning. So if we address all this, it is a matter of time where the market could take off and have the proper foundation and sustainability to give the returns that it should be giving in the future.
Mr. Ray Abeyewardene, I would like to, during this round, start talking about how we move forward here. Yes, we have had challenges for over a period of more than 2 decades, but looking ahead, moving forward, we cannot forget about the closure in the recent past during especially because of the curfew. On one of my programs at Adadarana, I spoke to stakeholders, I spoke to the SEC, the CSE, and stockbrokers. But the common consensus was that the Colombo Stock Exchange should have continued to operate. But the SEC responds that this was done in consultation with all stakeholders, but at the same time, there was a curfew in place. So there was a challenge in terms of digitalization, that we're not ready to move ahead with online trading. But during Dr. Aditya Vikramanayaka's time as chairman too, you had a massive role to play alongside Dr. Vikramanayaka in addressing these issues, in talking about these issues. What's taken so long, and what do we do now to move forward in the case that we face similar issues?
Yeah, before I get to the closure, can I just touch on what Dr. Vikramanayaka and Ravi just mentioned? I think Dr. Vikramanayaka hit a very, very pertinent point here, made a very pertinent point when he said about thinking. They do not listen, and that's the biggest problem that we've had for the last 20 years. Very simple thing, Doctor, is that even on the demutualization, I know it all sort of attitude from there is the thing that has stifled it even to date, that we have not been able to pass the Demutualization Act. It's on a mere trivial, if I would say, insignificant amount that we are bittering about like children. So we've been battling this for, I think, almost maybe 10, 15 years. And we thought we came to some kind of a compromise, but again, I'm saying it with responsibility that those in the SEC thought otherwise, and then we went back to the drawing boards, and that's why we failed to push the demutualization bill through. What we see now in the worry, if I'm looking at it from future, is we have a Chairman Dayaratna, and the Commission members, as well as the DG, who are prepared to listen to us, who will say, Ray, you tell us, you come up with some thoughts, give us your suggestions, let us then deliberate that, and if need, we'll come back to you. That's the kind of mindset we should have had, sir, a long time ago, which is what we have lacked. When we have people who think that they know it all and that they have been there and done it all, we'll never be able to make it this. And we'll continue to do that if we do continue in the future to have people of that caliber. So we need people who are saying, look, as you said, y'all are the people who have been there. Please tell us what needs to be done. Then within what is an available scenario or available rules and regulations, to see whether those can be implemented. Ravi, your point is very pertinent too, in that if we are to seriously develop this, we need a larger body, Ravi. We need to have a very high-powered government led by a very, very senior government official to drive this as a plan, with a maybe 3 to 5 year plan in what we want to do. We can't go the way we are, and if we are to doctor, we'll remain the way we are. Then I'm coming to the closure itself, Indivari. I think the perception that it is as a result of a lack of digitalization, I think it is slightly, I wouldn't say it's very correct, because the main cause, I think, or the main concern is that because of the curfew, clients were not able to meet or make payment. As you know, we are still a culture that is very much comfortable with writing a check, sending a check, receiving a check, depositing a check. So the concern was that during curfew, clients would not be able to move the payment or have access to banking facilities, because as you know, although banks were open, it was restricted, and that there will be a constraint in being able to receive as well as pay out monies. So that led to the concern that might have a settlement failure, because bear in mind, Indivari, there's a rule that if you purchase for over 20 million, you need to make a cash payment on T+1, and then you need to make the balance on T+3. So that means there are 2 payments to come. We haven't reached a level of sophistication where most clients would have internet banking, who are able to just go into their computers, just log in and transfer the money. We still follow largely the industry follows the check collection and check payment basis. So the curfew greatly inhibited that movement. And I think that was one of the main concerns that the regulator had. And if you look at the back office, Ravi, I think that aspect of it is what we needed to digitalize if we are to overcome that. But that, I think, needs to bring about a greater degree of involvement from clients in being able to be more sort of internet banking oriented or more savvy in making payments using digitalization.
Dr. Vikramanayaka, I think moving ahead, you were looking at a platform where it enables trading even during crisis situations. During the central bank bomb attack, I think you'd have something to relate here. But again, while we look back, let's take lessons from the past to see how we can move ahead to create a sense of stability to especially foreign investors, because we saw a lot of foreign investors moving out of the market.
Yeah, Ray, I think I refer back to about something you said coming out of a question. There are 2 thoughts that I have. I may be wrong, but these just are my thoughts. I think we made a fundamental mistake in keeping the market closed for this long. Okay. I remember when we had the central bank bomb, you were there in the industry at that time. When the central bank bomb went off, I made sure, or rather we made sure, that the market opened the next day. Okay, at least for a short time, to send out a message to the world that Sri Lanka is open and nothing can keep us stopped, right? It's true that there might have been problems in the back office, but again, we should have been proactive. And again, I put the blame on the SEC. They should have looked at this a long time ago. right? We are a nation used to disasters like this. And we should have not have waited for something like this. It didn't have to be the COVID. It could have been another bomb, right? So we shouldn't have been sitting back waiting till something like this happened to find solutions. You will remember that when we introduced full automation, when that was in 1997 or 1998, you all involved in this process. We selected a trading system that would cater to all of this. We didn't introduce an off-the-shelf trading system. You will remember that. We refused to take that, and we told Tony at Millennium, give us the system that will allow us to do all these things, right? But we have not built on that. Everybody else took the core parts of our system and they have developed stock exchanges. The London Stock Exchange works, I think, on that foundation, right? We missed the bus, unfortunately, right? So these disaster situations should have been looked at earlier on, right? But I think we should have at least opened the market, right? Again, you might have reasons for not doing it, and I'm not disputing any of that. But I think we should have kept the market open at least for an hour every day. We could have made arrangements with the banks, for some sort of special arrangements, just to show people that we're open. See, these messages stay a long time. The fact that, people are going to remember the fact that we did not allow them to get out of Sri Lanka when they wanted to. And fund managers have long memories, that's the thing. So you're going to have to find it very, very difficult to bring those guys back here again. Ravi, you're probably more familiar with all this. You probably know what their behavior is. But this is going to have a lasting impact, and I'm very, very worried about it. Again, I'm not putting the blame on anybody. I'm certainly not putting the blame on any party. But we should have thought about these things in advance and put in platforms to deal with situations. There's one other thing, Indivari, that I want to address. You made another point. I think you or Ravi made a point that we need to get together and put our brains together and come out with a plan. Now, I've been advocating this for a long time. You need to take everybody in the industry out somewhere, have a retreat, and discuss what the problems of the market are. It's not for the SEC to tell you, look, this is your problem, right? It is for the SEC to listen to you all and try to learn something from them, from the industry, and try to facilitate developments, right? As Ravi pointed out, we are still a vanilla market. We trade in shares, nothing else. There are a few debentures there trade, but there are no other instruments. I mean, this is shocking coming from a country like this. I mean, we are supposed to be one of the most literate countries in the world, and we can't come out with basic innovation. So those are things we need to work at. And in fact, I suggested to the SEC that they have this retreat, take everybody, take the rogues, take the honest people, take the priests, everybody you can think of, and pool your ideas and take what's best and start rebuilding the market. Sorry to go on and all like this. Okay, guys.
When we talk about start rebuilding the market, Mr. Ravi Abesuri, I believe you have a massive role here to play too. You, alongside other brokers, other market, other players, other stakeholders. Now, we see a lot of challenges going forward, but what kind of intervention do you seek from the Securities and Exchange Commission while the Stock Exchange facilitates all this? What are the immediate challenges and measures that you would like the Securities and Exchange Commission to probably put forth as directives to the market?
Yeah, I think Arita also brought up this issue. We could have easily digitized the market. Checks our history in the world. Which is something which the central bank has also talked about, moving into digital banking and helping the industry to be much more efficient. If you take India, even everything is online. These checks are not something which people use, and that's why they didn't have to close their markets. So in the reform agenda, I think the initial requirement is move with times and have a much more forward-looking market in the sense of new products. Now, as we were mentioning, we have a pure vanilla one product type of offering in the capital market. You have to have the other products, exchange traded funds, real estate investment trusts, and then the derivative instruments. Because if you had those, then this kind of falls may not happen. People take the opposite position and also make money even in down markets. Now in Sri Lanka, if you are a portfolio investor, you have to look up and wait when the market comes down. You can't hedge. So there are lots and lots of gaps in our market because we have not moved from where we started. We were the pioneers in, first of all, going from an open outcry kind of a market to electronic trading. But thereafter, everything stopped for 30 years because of the war. And then after the war, so since 2009, we have not moved forward. So there, I think the fundamental reforms required, if I take one by one, is the supply side. We need more companies listed. As Arita was also mentioning, the CSE has ceased to be an avenue for companies to raise debt and equity capital. So when you have a market which is not, used, then it's not going to be very fruitful. When companies doesn't come forward to the capital market, I mentioned capital in inverted commas, that is the market where you raise capital. So if you don't have companies considering that as a main source of raising capital, then you have failed. Now the banks are struggling to support the COVID-19 impacted companies, and the government is putting the whole onus on the banking system to support. Whereas if we had a developed market, it would have been the main provider of additional capital. Now it is not happening. Then we take the demand side. We need a lot of policy reforms to create that institutional investor base, because everything is captive. I think practically the banking system is what is there in Sri Lanka. No other market. So we need to develop the capital market and get more, the statutory institutions like EPF, ETF, and NSB also coming in to play their role, because they have the long-term capital, not the retail investors. We need institutional investors who mobilize money from the retail investors and invest with professionalism and understanding and the long term. That is insurance. Now I am in the insurance company and we don't put a cent into the capital market. Why? Something wrong in the market. So that's where I think we need to get the demand side addressed, where you get the statutory institutions, insurance, pensions, provident funds coming into the market to generate that demand and the liquidity. Then when you come to liquidity side, again, this issue is we don't have sufficient free float in some of the companies. Only few has that. So that again is an issue that has to be addressed, where we have sufficient float. Otherwise, it is very easy to few high net worth individuals to manipulate the market. So that also needs to get addressed. And then we have to also not forget that there are governance issues where, like the corporate governance code, which is not yet mandatory, whereas it has to apply to all listed companies when it comes to governance, because their behavior ultimately affect the stock price. So when it comes to managing these companies, the boards of the listed companies has to be looking after the interest of all the stakeholders, not their own. So these are the critical issues which we can get into details if required, but the fact is, holistically, if we address these three areas, we'll have a much better foundation to have a sustainable market.
I'd like to also open the platform for questions and answers from our viewers and participants, because I think more than they have a lot of questions here. But first, I'd like to take up a comment by one of our statements who say that a Securities and Exchange Commission representative should have been included to make the discussion a fruitful one. Yes, we agree. Biznomics did extend an invitation to the Securities and Exchange Commission, but it was very respectfully declined to allow the other panelists to be able to discuss the question of a vibrant capital market moving forwards, which is why we don't have a SEC representative. But again, alongside Mr. Ray Abewardhan as the chairman of the Colombo Stock Exchange, I think you'll be able to also speak at times on behalf of the SEC, if that's possible. But some questions I would like to take up right now is, most of the economies are having options futures to trade when we are going to implement such platforms in Sri Lanka. I think they're referring to the earlier question we were addressing in terms of facilitating trading. So Mr. Ray Abhirwardena, I think you'd like to take up this question.
Would you like to share the question with me again, please?
Yes, most of the economies are having options, futures to trade when we are going to implement such platforms in Sri Lanka.
Yeah.
I think the question is
No,
more
I got
about...
it. I got the gist of it. Yeah. So I mean, that's a given. As I said in previously, that's something that we have lacked. We've not had. We are a single equity, one stock vanilla market for the last 100 years. And that's one of our biggest problems that we've had. The main concern there is that we do not have a DV, as I said, that's a delivery versus payment platform, and a CCP, which is a central counterparty system, which will facilitate or which will provide us the opportunity or the ability to then bring out other products. So the fundamental requirement of a DVP as well as a CCP, which we do not have, which are the launching pads to provide us with other products. So if I'm to take you as to why we've been having discussions with the regulator previously, there were issues we had to overcome, but I feel now that we are on the right track, and hopefully, if we are not delayed too much as a result of COVID-19, we will roll out the DVP platform before the end of the year. We were hopeful to do it by mid-year, but we may now get pushed a little bit to the third or fourth quarter of the year. That will pave the way for us to then look at bringing in other products.
Foreigners are leaving in numbers, and banking sector took most of the brunt. What are we doing about this trend? I think Mr. Ravi Abesuriya, you'd like to talk about that. And there is also an addition to that question. Is it because our banks are doing bad, or have they lost the confidence in the country as a whole? You're formulating policy and proposals in terms of how we resurrect the banking and financial sector. You might like to take this question.
Yes, actually, one of the reasons the foreigners are leaving is we had downgrades by Fitch, S&P, and Moody's. So that is a message for international investors where the macroeconomy is not going to be very healthy for some time to come. That is because of the expenses that the government has to spend on the COVID-19 and our foreign reserve situation and the maturity of the foreign debt. So considering all that, the rating agencies have downgraded, and the foreigners are exiting from not only Sri Lanka but most emerging markets, because their markets also had the similar kind of bear markets where there is opportunities in those markets, as well as markets where they may be more comfortable. So the reason for foreigners to leave is that it is not something to do with the banking sector per se. But again, we cannot forget the government or the central bank directives that were taken into consideration to address the COVID-19 impact on the companies. There is a debt moratorium, which is about 6 months of no revenue to the banking sector. So as soon as you give a moratorium, the debt repayment stops. On top of that, interest payments also is questionable. At this moment, the banking sector doesn't know exactly what will happen to the interest payment. Central bank says it can be recovered after the end of the period of the loan, which means if it is a long-term loan, say 2 years, the interest can be charged only after that 2 years for another 6 months. So there are issues which will have impact on the banking system, particularly their top line and the profitability. On top of that, there are other directives which said banks should not be declaring dividends. That is fine, but at the same time, it sends a message which may have a lot of negative connotations, where when the government starts giving that kind of directives to the banks, it is, it's better to do those things silently, because if the bank comes to the central bank for liquidity support, then they could have implemented. That was the original plan, but suddenly central bank announced no more payment of dividends, things like that, which ultimately hurt the investor sentiment, particularly foreigners. So then they were exiting from the most liquid and the most attractive financial sector. And of course, we have to understand, because of the support that is given, the bank's performance will be negative for a few quarters, but the banks will recover. The banks, when this COVID-19 hit, were in a very strong position in terms of capital adequacy. So there is no danger for the banking system. And banks will always safeguard the deposits. But unfortunately, the message when you communicate has to be very careful when it comes to foreign investors.
I would like to turn to Dr. Aditya Vikramanayake about an earlier comment you made on the regulator. I think we have a lot of participants on the chat who say, we agree with you, Dr. Aditya, the regulator is there because there is a market, not the other way around. But you, as the former Director General of the Securities and Exchange Commission from between 1995 to 1997, if I'm not mistaken, what did you do right to ensure that what is left and what is positive of the market and what's continuing today was ensured? And also another question I'd like to talk about is the Securities and Exchange Commission Act. I think Mr. Ray Abeyewardene touched on it, but this has been on and off the table. But then how do we relook at this? What do we need to do in order to take this forward?
Yeah, I think the SEC Act is not really a priority. Let me answer your first question. The way you regulate the market is to accept the fact that the market knows more than you. You must also be humble enough to ask the market what they think before you do something. Okay? That is the secret, or that's the secret of success to good regulation. You're not there as a policeman to put everybody in jail. Right? If they do something wrong, certainly you do that. But you're there to facilitate the development of the market. Right? You must always listen to what the market says because they're 10 steps ahead of you. Right? And until you do that, and until you do that, you can't address the problems of the market. Now we discussed a whole lot of things about, DVP, all those things. Those are things that the market knows, not what the regulator knows. Right? Markets develop in their own way, and you clear the road for that type of development whilst protecting the basic rights of stakeholders, third parties. Right? And that is where we have failed right along. I don't know whether the others agree with me on that, but if you fix that, and I think that will probably be fixed with the new people in India, right? Until that is done, you can't make a change.
A few other questions too. I'd like to take that up before we talk about listing of state enterprises, financial literacy, awareness, education. These are also areas that I would like to very quickly talk to the panelists. But let me read out a few questions so that we can take them all together. Any idea on transaction cost reduction in future? Currently, for all transactions up to 100 million, is 1.12% when buying and selling on shares. For small investors, it will be a big relief if you can amend the transaction cost as one-time payment. I think we can only give an opinion from the panelists in this regard. And there's a question particularly to Mr. Abeyewardene. When will the CSC make available pricing data to the general public and other trading platforms like tradingview.com? And a few other platforms free of charge, which enables more foreign participants to bring to be brought down here. This was done by India and other markets to make their markets more attractive to foreigners. And brokers tend to share commissions. If parties in the transactions are in agreement, is it a way forward? When will you introduce short sell? And there are some companies' issues, rights while they are in a lost path. Will the CSE have control over fake promises made by companies? So I feel that there are questions here for Mr. Abewardana and Mr. Ravi Abesurya too.
If I can just start out, Induvari.
Yes.
Primarily, I think if you look at the transaction costs, I do agree that the costs are high, but there is a huge cost that the brokering firms are incurring as well. We have, I think, the majority of the brokers who are making losses are finding the going very difficult the last few years. So I think at this juncture, it might be a little difficult to look at reducing costs. But we have brought in a tier system. Earlier, it was a flat brokerage regardless of the volume of transaction. But we have now brought in tiers. We've made it, there are structures in place so that above a certain amount that the rates get reduced. So there is an incentive. In terms of your question about the internet, I do believe there's internet trading. So I missed the point as to what more the viewer was alluding to. We do have where lots of our clients are avail themselves of the internet trading facility. I missed the other one. I think Ravi, can you take on from there? There's another point that was.
Yeah. So in my view, I have a slightly different view. See what has happened in other markets. The development came in with the discount brokerage, where it basically moved away from full service. Now in Sri Lanka, we have this so-called full service where you have to deal with the investment advisor. Now other countries moved away from this investment advisor to electronic trading, where the client learns on his own. That is where the financial literacy comes into play, and do the trading on their own, which is very cheap. You hardly, in the US, it is free now. So it is what is required to democratize the stock exchange. And unfortunately, we have a market where there is about 9,000 people active in the market. So there are about 7,760 or 1,000 CDS accounts. There's hardly any people trading or activities. So if we are to move away and have much more wider populace actively trading, you need to move away with this high cost full service to a discount brokerage type of operation where you only provide the platform and people can buy and sell at their own and have various instruments like short selling to derivatives, which is a must. We have not moved away from that old traditional system. India has. So that's number one. And then we have to also move away from the online trading where there is an investment advisor behind it. You know, today what we have is internet trading with the investment advisor still, because you have to go after the client to get payment. He won't pay otherwise. That's not the way it operates. It operates where you have to have a funded account and you can trade out any amount. In Sri Lanka, that's not the way. So unfortunately, no foreigner can use internet trading and come in and pay electronically to online banking, because we are still in this age-old tradition of checks. We have to completely stop checks and move away and tell, look, if you want to come into the stock market, use internet banking. And that is there in every bank now. You can't find a bank without internet trading. So internet platforms. So move away with bold decisions. That is what other countries did, where their regulators and the market got together and moved into newer technology. And then you will have a much better market.
While I also request all our participants and all those who are viewing via Facebook to send us your questions as soon as possible, because we are in the final few minutes of this discussion. I'd like to take up the question of listing on the Colombo Stock Exchange, state-owned enterprises. In order to revive loss-making state-owned enterprises, this is seen as a more viable solution, a more sustainable solution. Dr. Vikramanayaka, I think you'd like to add something to this.
Yeah, I think you got to do the listing of the state-owned enterprises for a very specific purpose, and that is to create buzz. Okay, you will recall that during the time of President Premadasa, he privatized the estates, for instance, and he created the whole concept of peopleization. Right? That is a very smart move. The reason he did that was to create a buzz and get the average layman into the market. Okay, that I think is one of the primary purposes. Now, just take for example Mobitel. Mobitel is a subsidiary owned by a listed company. There is no reason why it can't be listed. So those are good examples of companies that can be listed. Take even the larger ones. Take things like petroleum or Sri Lankan or whatever. I don't know if you can do it. It will take a lot of time to prepare for it. But the state, the fear is that you're selling state-owned assets. It doesn't have to be selling state-owned assets. You keep control. You let off a part of it to the public, but you create governance structures that will ensure that they're run like public listed companies. These, apart from the fact that you'll create some sort of buzz, by bringing in the retail investor back into the market, it will also bring the foreigners in. Because at the moment, one of the biggest problems that we have is that foreigners don't have large parcels that are interesting for them to look at. It's only the state enterprises, some of those that can actually create those parcels. So that needs to be looked at. It has been, talked about by a lot of administrations, but nothing has really come out of it. They are scared to make that move. There is no reason for that. You're not setting it off completely. The state will keep complete control and ensure that employees are not the employment remains. It will ensure that basic services will be provided for at reasonable prices. Take telecom as an example, right? All the prices came down because of privatization. So that's the message that the government has to get out and show the benefits of listing some of these companies, right? So it's the message. And I keep telling this to people, the best message that we ever came across in the capital markets was that concept of peopleization, where they gave the employees 10% of the shares at a reasonable price and got the employees to push for privatization. Ray, you and Ravi both were there at that time. You all remember this. So those are little things that the government can learn from and try to implement today if you want to get this thing going. And quite apart from the stock market itself, right? It helps the state. It helps to run these entities in a more professional way. So those are the advantages.
Mr. Ravi Abesurya too, we'd like to ask you a few questions, but Mr. Ray Abeyewardene, we know that the stock exchange itself has been carrying out a lot of market awareness campaigns, not just locally, but overseas as well. But while talking about the question of awareness, financial literacy is very low here in Sri Lanka. But what are the measures that you're taking right now on the market development aspect?
In terms of financial literacy in Induveri, we conduct seminars right throughout the year. I think apart from the last 1.5 to 2 months. Last year, for example, we did as much as 450 awareness seminars. We take the market to even the outskirts, to those who are looking at getting into the market, that is for the new investors, as well as in the last couple of years, under my chairmanship, we initiated seminars or presentations to the already existing investors, that is to the discerning investors who've already invested in the market. So we pitched, I think people like Ravi have come and made presentations at the higher level to people who are already in the market. We thought that might be a good opportunity for us to talk to them further about valuations, about the benefits of long-term investing, and sort of try to make them even more savvy about the long-term benefits of the market. Because I saw somebody I came across the screen about people thinking that this is a casino. It is not a casino, because if people do take that sort of attitude or want that mentality, then I think they should go to a casino, because the stock market is some place where you invest for the long term and you will make money if you have the holding power. the issue here is that people come in on the short term, they come with borrowed funds, some of them don't have a clue about the pitfalls or the downsides of investing in the market. They come, they get their hands burned, they lose not only what they have, but they lose money that because they borrowed, they need to settle the collateral, and that leaves a very poor taste on them, and that also creates adds more pressure onto the broking industry, because then you are dealing with people who aren't savvy about what a market is actually there for. So that's what we've been trying to do. We've been trying to teach those who are not aware of the benefits of the market, and those who are also aware. We're trying to make them have more knowledge, more information, provide them with more research, and make them even more discerning than they are now.
Ray, I can't resist. I have to jump in, right, and just make a comment. Look at the irony of the whole thing. You do 350 awareness programs.
450, right? Dr.
450 awareness programs. And then you have some clown at the SEC saying the market is run by the mafia. So who's going to come and invest in the market? I mean, come on. These are mixed messages. You all contradict each other. So how can the public have any confidence in our awareness seminars? Do you see what I'm saying? You all have to sing from the same hymn sheet. Until then, you can't make it work.
So I think it's time that the clowns are eliminated, Dr. Vikram Nayak, and I hope that they have brought in good people now who won't make such irresponsible statements.
Exactly.
I don't see Mr. Ravi Abesurya. There must be some sort of technical difficulty, if I'm not mistaken. But anyway, there are a few questions too. Before we take them up, I'd like to address the question of our theme itself, the last dip, rally to a vibrant capital market. Dr. Vikramanayake, with all your expertise and all your knowledge throughout these years, the decades of work you've done, we'd like to probably maybe make the closing statement here on the theme itself.
Yeah, actually, when I look at what's happening, I feel really sad. Okay, because when we were there, when we were young, when we were much younger, and we started this whole thing, we were very, very passionate about what we did, and we were very proud of what we built. Right? I don't know whether you remember it. We had one of the first fully automated stock exchanges in the world. We were probably the first in the region. We had the best financial reporting. We brought in the CFA. We trained financial journalists. We did public awareness programs. We created brokers associations. We promoted self-regulation. I can go on and on and on about what we did to try to build this market. I still remember we used to have foreign fund managers come into Sri Lanka. They used to visit the region and come into Sri Lanka. And they used to say, God, this is paradise, right? Because compared to every other place, we had one of the best systems working at that time. And unfortunately, we couldn't build on that, and that's tragedy. And if you take a look at the development of this market, nothing has really developed after that. And we all have to blame ourselves, whether we are in the market or outside it. We are all collectively responsible for not putting pressure on the regulators for creating a more responsive market for all of us, right? And we need to work at that, right? So hopefully, even at this time, we can put our brains together and try to get something going. As I told you, Ray, we have somebody in charge now who's willing to listen. I've spoken to him on several occasions. He's willing to listen. In our lifetime, this is going to be the last chance. And that's why I keep saying, let's put our brains together and try to develop this market, not only for ourselves, but I think the country needs this very, very badly, right? For the moment, we've not had a problem because most people who could afford it would go to a bank and take a loan. They could pledge their personal assets and get loans. But that won't last forever. There are so many startups which are now coming into being, right? All those guys at some point are going to need to come to the stock market to raise capital, right? So you have to look at the broader picture. We need to rebuild this, and we got to believe in this whole thing to get this thing going again. But we need to work together. It's a collective effort. The SEC can't do it together alone. The stock exchange can't do it on its own. The brokers can't do it on its own. It has to be a collective effort.
I fully agree with Dr. Indivari. The only thing I don't agree is when he said when we were young. I think you're still very young, Doctor.
Look at my gray hair. I'm good looking, but not young anymore. That's a problem. Okay.
The last dip, rally to a vibrant capital market. I think Mr. Bray Abeyewardene, you, while you're still here at the Colombo Stock Exchange as its chairman, I think there is a lot more that you are planning ahead given these challenges. So your closing statement here, how we position ourselves. The first question that we raised again from you. What is the message we're going to send to foreign investors? Because there is concern about foreign investors moving out of the market, and again about local investors. I think you spoke about a lot of measures taken by the stock, the Colombo board itself. But again, is this going to be the last step? How do we rally to a vibrant capital market? Your closing statement.
From a foreign investors perspective, in Diwari, there has been foreign inflows as well. It's not that there have been mass scale all out foreign sellers as well. I mean, you're looking at the net outflows, which has been there, as I said, from last year, we've been having net outflows. So I think we need not be too sort of overly this thing that something dramatic or drastic has happened in the last couple of weeks. We've been continuously seeing outflows, but there have been inflows as well. And I feel that at the right time, depending on the valuations, we're caught in a global situation. As we must not forget, Diwari, we are not isolated here. And as Ravi said very correctly, there is a flight of funds back to US and other markets from this part of the world. India is down 25%. I've got some other statistics of markets. Indonesia is down 27%. Philippines is down 23%. Singapore is down 19%. These all year to date. And our market is also down 24%. So we're not something that is isolated or frightening. It's just that markets have been taking a hit from in this part of the world. And if you look at it from an Asian perspective, there's been a lot of funds that have been flown back to the States, to the US. So the other issue is that fund managers are also under pressure for redemptions because the people who have invested in those funds probably need to liquidate. So they look at markets where they have the ability to exit. So that's where I think if we had our markets, if had we opened, that would have given them a greater access to be able to sell or get in or invest if they so desired. The immediate plan that we have, or my hope, the aspiration is that we will get the DVP in as quickly as possible, which will pave the way for us to be able to bring other products into the market. Derivatives, I remember I did hear somebody speak of short selling. Those are products that we could offer. If we are going to remain as a one straight line vanilla equity market, we will not survive for long. Then, as Dr. Vikram Nayak said, yes, I was wondering, Doctor, where we lost it all, because at one time we had foreign investment banks that had invested in businesses here. We had top class research. We had privatization. We worked the SEC and the CSC. I remember, I think it was soon after your time. I used to go regularly to the Treasury for meetings that were chaired by Dr. P.B. Jasundara. Mr. Ken Balendra was the chairman of the SEC, Doctor. I think that would have been soon after your. I'm wondering whether you were.
I think you were there.
Probably, yes. And we used to have regular meetings, and that is the kind of interest that they had in driving the market. And not only during late President Premadasa's time, Doctor, even during Mrs. Kumaratunga's presidency, we went through the process of the privatization where the plantations were. We started with United Motors, Lanka Milk Foods Distilleries. Another company that we missed out when you spoke of is you said Mobitel is even Sri Lanka Insurance. I think that's an excellent proposition for a listing if we do decide to go. So we need to, what we are now trying to do is with the SEC, go back to a 10-point plan, have committees jointly that will address these things, have timelines to meet these, to come up with proposals and plans as to how we are going to implement it. I hope, sincerely hope, that at a higher level, the authority, the government also takes cognizance of these discussions and do give their input or their support in carrying it out. And as you said, Doctor, we cannot function in isolation or doing this. So we need the participation of most stakeholders. And I think you did suggest something excellent, which we had some time ago, but we haven't. We need to go out, we need to sit somewhere, we need to plan, we need to spend a couple of days and decide what exactly do we need for this market and how we are going to achieve that. So I think that's what I would like to see happening sooner than later.
Panelists, yes, I must thank the panelists for your time here to make this discussion an informative one for our viewers, our participants via Facebook and online. But I think we're missing Mr. Ravi Abesurya. There might have been.
I think he's on. He's on again.
Sorry?
He's on again, I think.
Yeah, I can. If you can hear me, I can talk, but maybe the video is not there.
Right. Okay. Mr. Ravi Abesurya, I think it's before we wrap up, I would like to turn to you for your closing statement and also some advice to investors. And there was a question about small investors. So we'd like to have your closing statement too before we wrap up the discussion.
Yes, I strongly believe our investors, particularly retail, I won't call them small, but in a bigger, wider number, they become quite powerful and influential, needs to be much more active in the market, where hopefully we will see in the future some major changes in the market where, as I mentioned, electronic trading, where in the proper way will happen, so that not only our retail investors, our Sri Lankans all over the world could be able to trade online and pay through the banking system. And in this space, they need to be much more financially literate. I have written a book which is there in a website called cfasrilanka.lk in all 3 languages. If people read about their own financial literacy and educate themselves, I think they will be much more successful in their personal finances. In Sri Lanka, I think a lot of gaps we see because of sheer lack of finance knowledge. They go and borrow and get into trouble. Even in the stock exchange, it's the same thing. They think they can make quick buck by borrowing and investing. Unless you really know what you are doing, you may lose everything by borrowing and investing. Whereas if you take a smaller percentage of your net worth and put it to a long-term investment in a fundamentally strong company, you will have much stronger, better chance of growing that after 10 years to a much bigger value. Now, if you look at carefully and study, you can learn this on your own. You don't need to go into so-called investment advisor, but learn on your own and then get into the market in the right way. Now, that's the most important advice I can tell investors. Do it yourself. Learn and do it correctly. Not depend on a third party who may not have your interest at heart. That is the most important thing you need to understand. Who will look after your money is you more than anybody else. So learn on your own and get to the market when you have long-term money to invest, and use electronic methods of transaction, which will happen in a matter of time.
I must thank all of you panelists once again for joining us via Biznomics to talk about the last rally to a vibrant capital market. Mr. Ray Abeyewardene, Chairman of the Colombo Stock Exchange, thank you very much for your valuable insights. And
thank you, it's been a pleasure.
Certainly. And Dr. Aratha Vikramanayake, former Director General of the Securities and Exchange Commission, thank you very much for sharing your expertise.
Thank you for having me on.
And Mr. Ravi Abesurya, former President of the Colombo Stock Brokers Association, and also who's heading the committee on proposals for the banking and financial sector. Thank you very much for joining us.
Thank you, Injewari. Thank you so much.
Thank you.
Thank you. And I think all our viewers would like to thank you. Biznomics will continue to. Thank you very much. Biznomics will continue to bring in discussions as this this, and I look forward to talking to as many experts and stakeholders on issues and matters that are pertinent as we move forward. So thank you for watching.